Want to identify the perfect time to buy a stock just by looking at a chart? In this video, I'll show you a proven method used by smart investors to gain big trends and avoid traps. This is a classic guide to technical analysis, ideal for both beginners and experienced investors who already understands basic like moving average, time frame and volume. By the end of this video, you will know how to instantly read where a stock is in its price cycle and make a confident decision. Let's revisit the foundation, price action stages. Every stock moves through 4 stages. Stage 1, base formation. After a decline, the stock moves sideways. The moving average is flat. This is consolidation. Stage 2, uptrend. The stock breaks resistance and begins to rise. This stage often delivers the biggest gains, the ideal time to invest in a stock. Stage 3, distribution. After a long price rally, the price gets erratic. The moving average flattens again, selling volume picks up and momentum is fading. Stage 4, downtrend. The stocks break support and drops below declining moving average. This is a high risk phase and avoid buying and holding here. Step 1, identify the stage. Start with a weekly chart and plot the 30 weekly simple moving average. If the stock is below this line or the line is flat, it is in consolidation, stage 1. We are looking to buy when it transitions from stage 1 to stage 2. That's when the price breaks above the resistance and also the 30-week moving average. Step 2, add the Mansfield relative strength indicator in the weekly chart. Only consider buying if the indicator is above zero line. This means the stock is outperforming the market. Now switch to the daily chart. Now plot the 200-day moving average. The price should be above it and the average should be flat or rising, not declining. This confirms bullish momentum. Step 3, volume confirmation. A breakout is only real if it is backed by volume. Look for 2 times or 3 times the average daily volume on the breakout day. This signals institutional buying, very strong confirmation. Step 4, confirm the price action. Check if the stock is forming higher highs and higher lows on both daily and weekly charts. Also make sure that the 30-week moving average is rising and plot the 50-day moving average on daily chart. It should point upwards to confirm the trend continuation. The stock above 50-day daily moving average indicates that the momentum is stronger. If the stock starts to travel below 50-day moving average, it starts to indicate that the short-term trend is weak. Step 5, check sector strength. A strong stock in a weak sector may not go far. Ideally pick stocks from strong performing sectors to ride the trend with more confidence. Let's understand what we have learned so far with few examples. Example 1, TCS. Now TCS is trading below the 30-week moving average line and the Mansfield RS is also below zero. This stock lacks strength. There is no buy signal here. Example 2, Reliance Industries. Now look at Reliance. Weekly chart. Price is above 30 weekly moving average and it's sloping upward. Now Mansfield RS is above zero line showing relative strength. Daily chart. Price is above 200-day moving average and the average is rising. Volume on breakout is double the average. The stock is performing higher highs and higher lows. Now add the 50-day moving average to this chart on daily time frame to continue monitoring the trend. All signals align this textbook stage 2 entry. Did you identify the entry point on example 2 Reliance? To summarize, identify the stage. Confirm breakout with moving averages and Mansfield relative strength. Validate with volume. Confirm price action. Check sector strength. Place a smart stop loss. This method helps you buy strong stocks with clear momentum, maximizing your potential with managing risks. If this video helped you understand technical analysis better, hit the like button, subscribe and share it with your friends who invest or trade. Drop a comment below if you would like to analyze a specific stock in the next video. Thanks for watching and I will see you in the next one.